Good evening, members. I, CA Deepak Chopra, Secretary, welcome you all for this study circle meeting on Demystifying the Indian Income Tax Bill, Key Changes and Practical Insights. We have our own speaker, CA Deepak Chopra, today. I request Chairman Manjunath Halusa to escort the speaker to the dais and greet him with the floral bouquet. Members, I do have the privilege of introducing the today's speaker. Deepak is a fellow member of the Institute of Chartered Accountants of India and has graduated in Commerce from Bangalore University. He qualified as a Chartered Accountant in the year 2011. He has a strong passion on direct taxes and has been regularly taking classes for CA students, company secretary, and Chartered Accountant courses. He was a regular faculty member of the Bangalore branch of Institute of Chartered Accountants of India for direct tax classes for CA students of final year. He has also been a resource person on direct tax matters at various forums at Bangalore and all South Indian major cities. He has been a resource person for a session hosted by Committee on Members in Practice. He has also been a faculty for officers of Income Tax Department at the National Direct Tax Academy and Direct Tax Regional Training Institute, Bangalore. He is presently serving as the chairman of Direct Tax Committee at KSCAA. He practices in Bangalore and heads the division of Direct Tax. Members, we present before you the speaker, Deepak Chopra.
Namaskar, and I wish a very happy evening to one and all present over here. At the outset, I thank Bangalore branch and organizers the entire committee for having invited me over here for this program. And I also congratulate the new team that has just taken over. I am sure, sir, we have a fantastic team. You take Bangalore branch to newer heights. It's already a very active and a very vibrant branch. Under the current team, under the current setup, I am sure it's going to touch newer heights. Now, while I load my presentation, if I may ask a question, how many of you here have been adventurous enough to read the new income tax bill? Sorry, I couldn't see the raise of hands. One. So please note the names and faces. All questions have to be directed over there. Because I do not claim to have read any of the provisions of, or very little provisions of income tax bill. So, thank you, sir. I need a lot of your assistance and support for conducting today's session. Just in maybe one or two lines. What's been your first impression of the read of the new income tax bill? Happy about it? Concerned? You're happy about it. Fantastic, sir. Okay, so before we get into the bill, which is our topic for discussion today, a minute or two into the history and evolution of the Income Tax Act as it stands today. Now, as you would see it in the screen, the first version of the Income Tax Act, or the Income Tax Law as we see it today, the modern version, the English version of the Income Tax Law, was brought in the year 1860. But even prior to this, we've had taxes on income being levied by rulers and kings, but then drafted English law on income tax first cropped up in our country in the year 1860. Of course, it was brought in to make good the financial losses suffered by the then British government on account of the mutiny of 1857. 1886, a separate act dealing with taxes on income was passed, which lasted all the way up till 1918. 1918, there was a new law which was brought in, again which lasted only for 4 years, to be replaced by the Act of 1922. The 1922 Act lasted for close to 40 years until 1961, where the present Income Tax Act, which we study and apply in our daily practice, was introduced. 2010, a new direct tax code bill was placed before the Parliament. There was a lot of noise created around it, but then it had its own silent death and it didn't see the light of the day. Thereafter, on 23rd July 2024, Honorable Madam Finance Minister, on the floor of the Parliament, made an announcement that there is going to be a comprehensive review of the income tax law, which will lead to simplification of the income tax law. One-line cryptic statement led to a lot of confusion and speculation as to what is the mode of simplification going to be, whether they are going to simplify or amend the existing Income Tax Act to make it simpler, or a new act is going to be thrown on us. And then finally, Feb 25, it became clear to us that we are now having to deal with the new Income Tax Act altogether. From 13th of Feb 2025 is when this new income tax bill, which is going to be a matter of deliberation for today's session, was placed before the Parliament. It is still in a draft phase. It is now being referred to a select committee for further review and recommendations. The select committee is expected to give its response by the next monsoon session. And the way things have been moving, at the pace at which things have been moving, I think we can be rest assured that by this monsoon session, we will have a new Income Tax Act in place. Now, having said that, from when is it going to be effective? It is going to be effective April 26. That would mean for 25-26, the tax and the income computation will happen under the new Act? No. It is effective from tax year 26-27. Now, that's something that we are going to see in our subsequent slides. There is a new concept of tax year which is being brought in the statute, and the new Act is, at least as of now, proposed to be effective 1st April 2026. Time is 1st April 26 andre return will be filed in 27-28. I have time till September 2027. Why should I be breaking my head now? We'll revisit this question towards the end of the session. Before jumping in, or before me starting off with my deliberation, it's important for us to fix a syllabus. We have to define boundaries and scope within which we are going to have our deliberations today, and have to, of course, set the expectations right. I don't know with what kind of expectations you have subscribed to this program today, but then let me set right, let me clarify what we are not going to discuss today, what we are not going to be deliberating today. What we are not doing today is, of course, a clause-by-clause analysis. We are not doing a threadbare analysis of each and every provision, each and every clause of the income tax bill. That's not something that we are going to do. And neither is today's discussion going to be a comprehensive coverage of that. In the next 100 odd minutes that we have got, it would be humanly impossible to cover the entire Act. And we shall also avoid all legal and hyper-technical analysis. We'll try to keep our discussion as simple, plain and practical oriented as possible. Having said that, here and there I might slip into some legal and some places hyper-technical deliberation. You may raise your hand and pause me there. So today's session, as I said, is more aimed at focusing on the key changes there in the bill, or other key changes that I have made myself aware till date about the bill. And what are the practical considerations and implications that it is going to have in our tax computation and probably in our daily tax practice. So today's session is more of a trailer of what is going to come in near future. Right? We're only going to have glimpses of what is there in the bill. We're going to have a broad overview of how things are structured, how things are now placed in the new income tax bill. So why do we have this new bill? As the answer as given by the Finance Minister and the Finance Ministry. The Finance Minister, in her speech on 23rd July 2024, that is when she presented the Finance Act 24 budget, the second budget of the year, where she made a statement that I am now announcing a comprehensive review of the Income Tax Act 1961. The purpose is to make the Act concise, lucid, easy to read and understand. This will reduce disputes, litigation, thereby providing tax certainty to taxpayers. It will also bring down the demand embroiled in litigation. So simplification and litigation reduction is a broad objective of the government for dealing this new bill. And then there is this press release dated 13th Feb 2025 where the Finance Ministry has once again clarified as to what was the objective and what went behind the drafting of the new bill. So they say textual and structural simplification for improved clarity and prudence. No major tax policy changes to ensure continuity and certainty. No modification of tax rates, preserving predictability for taxpayers. So all in all, throughout they have been saying this that we don't intend to amend the income tax law. We don't intend to change how things function, how your income is computed, how you file your returns. We don't intend to make any structural changes to the practical application of the income tax law. There is no policy change that we are bringing in. So they make this statement. There are a bunch of policy changes which are very intentionally put into the Act, and there are a lot more policy changes that have unintentionally crept into the new income tax bill. And as regards the objective of achieving simplification, we have a glimpse of how much simplification or complication the new income tax bill has managed to achieve. And when it comes to reduction in litigation, all that I can assure is income tax practice in years to come has great scope, particularly tax litigation. The same press release has also released some statistics, chest thumping statistics. So they claim, of course I have not verified this, the number of words have reduced from 5 lakh or to 2 lakh 50,000, almost a 50% reduction. The number of chapters have reduced from 27 to 23, again almost a 50% reduction. Sections have reduced from 819 to 536. Tables have increased from 18 to 50. You will find a lot of tables throughout the Act. A lot of tables, a lot of the provisions, a lot of the stuff that is there in the Income Tax Act is now being turned into a table. In fact, if you start reading, you will start wondering, Act hai ya reckoner hai? It's a good thing, I'm not complaining here because tables are certainly much more easier to read, understand and also implement. There are a lot many formulas also. Formulas of course are much more easier to apply rather than read complex sentences, complex lengthy sentences, understand and then apply. We have straightforward formulas on how the computation should happen at a lot of places, which is of course a welcome move. But then the thing that I fail to comprehend is how is this statistics even relevant? Does reduction in number of words automatically translate to simplification and reduction in litigation? If the sentence is said in 10 words or 100 words, as long as the sentence is conveying you the same message, what difference does it make to us in our practical life? Is brevity always equal to clarity? Is a question that we have to ask ourselves and try to find out answers by the reading of the law. They have also said 900 explanations have been removed. 1,200 provisos have been removed. Again, statistical verification of these numbers are not done, but one thing I can assure for certainty is that this is the most misleading statement in the FAQ or the press release. 900 explanations have been removed gives you an impression 900 explanations have been deleted. Absolutely no. All those 900, or rather at least 99% of those 900 explanations are still there, part of the statute. The only difference that is being made is the title, the label explanation has been removed, and what existing law provides as explanation is now being converted into a subsection. Right? So the text, more or less in the same language, remains in the income tax bill, just that the branding has changed. Explanation has now become a subsection, which has some interesting consequences. Let me give you an example. But before that, what role does an explanation serve in an act? What is the purpose, objective of explanation? That's a question that you have to answer properly. We will also help you out with the mic. It's a mic also. Anybody from the attendees that are present over here? Clarity. What is the purpose of an explanation? Explanation is
only for a purpose of clarity.
It is only for the sake of clarity, right? It is to clarify what is already said in the main provision of the section, right? Nothing more, nothing less. Explanation in a normal understanding is never intended to and never takes away or adds anything extra to what is said in the main provision of the section. Right? Explanations are only meant for clarity. A lot of times explanations are inserted out of abundant precaution. There is something in the act which is well known, well understood, but for the sake of re-emphasizing, for the sake of absolute clarity, the explanation is added to re-say what is already known or what is already said in the main section. Right? So let's look at one example of explanation as it exists in the current act. What I have picked up for our discussion is explanation 1 to section 15. What does section 15 tell you? Section 15 is a charging section for income from salary, which in a one liner just tells us salary is chargeable to tax on due or receipt basis, whichever is value. So let's read this explanation. Can I have some help from the audience to help me read this explanation? Anybody volunteering to read the explanation?
For the removal of
Please.
For the removal of doubts, it
See,
is hereby
this is
declared
an
that
exercise, this is a read for the first time for all of us, including me, right? So we'll collectively try to understand, dissect and see what nuances we can, find out of the reading of the new paper. Yes sir, sorry.
Okay. So for the removal of doubts, it is hereby declared that where any salary paid in advance is included in the total income of any person for any previous year, it shall not be included again in the total income of the person when the salary becomes due.
In simple words, what this explanation is telling us, if salary has already been taxed in the preceding year on receipt basis, then in the subsequent year, which is the year of approval, it shall not be taxed again on due basis. Right? A needless explanation. Right? Even if this explanation is not there in the statute, we already know this principle very well, that there is no possibility of income being taxed twice. Right? There cannot be a double taxation on the same income. So with or without the explanation, the position of law absolutely does not change. And to be fair, the explanation also acknowledges this. See, the explanation begins with the phrase for the removal of doubts. So it's telling you something that is already known, but just in case in somebody's mind there is a doubt, I am hereby clarifying that there is going to be no double taxation. This is the role of the explanation as we have it in the present act. So this is an explanation inserted out of abundant precaution, clarifying the main provision, that is section 15. Now what has happened to this explanation in this new income tax bill? Explanation remove bolana liar. It is very much there. Just that it has now become section 15 subsection 3. Can you pass on the mic to your neighbor, sir, and then we just keep passing it on.
section 15.
Hello? Yeah, 15 subsection 3. If any salary paid in advance is included in the total income of any person for any tax year, it shall not be included again in the total income of such person when the salary becomes due.
The immediate changes that you notice, number one, of course, brevity. The number of words have simply come down, and it's much easier and simpler to read. Totally acknowledged. Change number two, something that we've already discussed, the label of explanation is gone. Explanation is now become a subsection. And change number 3, the key change for me here is, for the removal of doubt, that phrase is removed. The rest of the sentences, rest of the context or rest of the import of the original provision, original explanation is trying to be retained as is. What impact does it have in the reading of the income tax law? One thing that has to be appreciated is, explanations are not substantive provisions of law, whereas a subsection is a substantive provision of law. The amount of weightage that is given to interpretation or reading of a subsection is far higher than the weightage that is normally assigned to a explanation. We've read explanation 1 to section 15 of 1961 Act first, and with this contextual background, we have jumped into 15.3 of the new income tax bill. For a minute, diverse yourself from Income Tax Act 1961. Jump down 10 years, 15 years down the line. Consider a new tax professional who's reading 15.3 for the first time, who has no contextual background of explanation 1 to Income Tax Act 1961. Don't you think this is going to be very confusing? Now read this again from the point of a fresh reader of the Income Tax Act. Now I have before me a substantive provision of law which is now telling me what is already taxed on due basis or what is already taxed on receipt basis will not again be taxed on due basis. That's the substantive provision of law. The immediate thought, the immediate doubt that comes to my mind is, what about the reverse scenario? What if income is already taxed on due basis? Can it now be taxed on receipt basis again? Because there is no substantive provision of law not providing for it or saving it from double taxation. What happens to other heads of income? Because you will not find a similar provision under other heads of income. So does it mean that a substantive provision under 15.3 is safeguarding only salary income and the other heads of income are not safeguarded from double taxation and there could be dual taxation? These are natural doubts that would crop up in the mind of any prudent tax reader. Of course, the end conclusion is going to be different from what we have discussed, but then to reach to that end conclusion, look at the amount of efforts that you have to put in. To reconcile this conflict in your mind, you will necessarily have to travel back to 1961 Act. What was the genesis and origin of this subsection? And then satisfy yourself, hey, this subsection is only an explanatory statement. This is only an explanation and it is not to be given any undue weightage beyond what you would to a normal explanation.
For that, 15.1 and 15.2, reading of 15.1 and
15.1
in that order will make sense.
The 15.1 and 2 tells you pretty much what is told to you in section 15 of the existing Act. Even if you want to come in a chronological read, this doubt will certainly crop up. And the only way you can resolve this conflict in mind is by reading this subsection as an explanation. Unless you do that, you will never be able to resolve the conflict of this is there over here for a purpose. Every subsection, every word inserted into a statute is for a purpose, and its purpose is limited only to the section or the objective that it is meant to achieve. Which means other heads of income don't get this benefit. Other heads of income can be duly taxed. The only way to conclude that this dual taxation is not what is intended over here is to conclude that this is only an explanatory statement and read this as an explanation. So the point that I am trying to make is, the subsection is explanatory in its text, it is explanatory in its objective. Why should it not be explanatory as a label also? Why should it come in as a subsection, but why should it not come back as an explanation? I am sure 2 decades, 3 decades down the line, when the next exercise of simplification of Income Tax Act is taken up, the first thing that they are going to do is, hey, let's pull out all the subsections which are explanatory in nature and let's label them back as explanation. So we could very clearly in our mind resolve this conflict because we have an understanding of explanation 1 of section 15 of the current Act. 10 years down the line, a tax officer reading it for the first time, a tax professional reading it for the first time, or for that matter a tax judge reading it for the first time is not going to take it such lightly as we have taken it now. So what's wrong in having a label of explanation is something that I have failed to decipher in this new income tax bill. Anyways, I had promised I'll not go technical and too legal in my discussion, barring this exception and few more to come in the coming slides. We'll quickly jump on to key changes, and I'll come back to a technical ride again, but then let's do some practical changes first. So this is, I think, well known. The concept of previous year and assessment year is now replaced with tax year and in a very crude and limited sense financial year. Objective behind it, the ministry felt previous year is a very confusing and complicated thing for a tax payer or a tax professional to say. I don't know what complication. Income earned in previous year is offered to tax and assessment year. I don't know what can get complicated in this, but for reasons best known to them, they said we are simplifying it by introducing this concept of tax year. The tax year में भी confusion हो सकता है ना? Tax year is the year in which you pay the taxes or the year in which you earn your income.
No, they presume advance.
The year of income I pay advance. Sir, I pay tax every year, sir. Not joking, but 13th of Feb is when the bill was introduced. 14th Feb, Times of India carried a front page news article on the new income tax bill, and then if you go back and read, there they said the concept of assessment year is now replaced by tax year. This is wrong. So people are already confused. Tax year does not replace assessment year. Tax year replaces previous year, and there is no assessment year concept. So throughout that, they will go on to tell you that you will file your return in the financial year subsequent to the tax year. So in a limited crude sense, financial year takes place of assessment year. Right? This is in fact more confusing.
No.
Financial year is the year when I draw my accounts.
Valentine's gift.
Valentine's Day.
It is not confusing. See, basically, you and me, if we look at it, can be confusing because we studied throughout our ages, etc. For a common man, if you go and look at it, a lot of IT professionals, etc., they don't understand what is previous year, okay, what is assessment, etc. If they will very well understand tax year and the next year. It is confusing for the CA fraternity or a financing accounting
A very
fraternity.
valid point made, sir. I totally accept your contention. Which brings me to a larger issue of law is drafted for whom, sir?
Draft is drafted for the citizens of India, not for the chartered
A law like income tax, who do you think is going to practice, read and implement more? A common taxpayer, a common man, or a tax professional?
It is making easy for the common taxpayer to understand, not to dependent on anybody else. They were trying to make it easy. We are creating complicated, saying that because of we are not able to adjust it.
No, I'm totally willing to adjust to this, sir. I'm a very flexible man.
Absolutely. So,
But then my suggestion here would be here, if at all they wanted to do away with this concept of previous year and assessment year, which they might feel is complicated, a better replacement would have been income year.
absolutely. See, each person, you think one way, I think one way. This is how the finance will look at it.
And how the way finance ministry, Madam
Absolutely.
Sitaram,
They have to look at that. I have my say point of view, I have your point of view.
So the point of view is,
We are worried about the income, they are worried about the tax.
Exactly. They collect the tax.
well said, sir, well said. Point taken, sir. So tax year and financial year is something that we have to start getting accustomed to. So financial year for the accounting purposes is your tax year, but for tax purposes, financial year is a year subsequent to the financial year. I hope I've clarified my point. And financial year, by the way, is used repetitively throughout the Act, but nowhere defined. So for understanding of the term financial year, you will have to go back to General Clauses Act, which in simple words tells you it is a year which starts on 1st of April and it's a period of 12 months, or rather 1 full year. Moving on, there is some small confusion and debate around a small tweak with regards to residential status. Section 6 of the present Act gives you residential status, and Section 6 of the new income tax bill also goes on to give you residential status. 6 to just the numbering of the sections have changed because explanations and provisions have now become subsections. Largely, the text and the tax policy remains the same. So Section 6.2 will give you the same basic conditions as we have today. It is 182-day test, or 60 and 365 day test, the same way we applied now. And then we have a proviso which goes on to say the 60 and 365 day rule will not apply to an Indian citizen who goes outside India, who leaves India as a member of a shipping crew or under the Merchant Shipping Act, or who leaves India for the purpose of employment outside India is the present terminology used. In the new income tax bill, for the purpose of employment is now replaced with for employment. So there is a huge ongoing debate in the legal and tax fraternity as to what is the implication of this removal of the purpose of. Probably they have done it to make it concise, brevity is the primary objective. And for a common man it probably will not make any difference also. But then as tax professionals, as tax enthusiasts, we are troubled by every little change. Even if a comma goes from here to here, when they change it. Right? So that's how we are built up, we are made up. Now I'll throw this question to you. For the purpose of employment, for employment, these two phrases, are they different or they mean the same? Okay, before that I'll give you a small contextual background also. Now this phrase for the purpose of employment under the current Income Tax Act has been a matter of deliberation in a couple of court judgments. The most recent one being last week, Mumbai ITAT, in the case of Mitesh Gulati. Right? So Mitesh Gulati was an Indian citizen who left India in search for employment. He did not go India on an employment visa. He did not have an employment contract in hand at the time he left India. But he left India, went abroad, looked out for employment, got an employment and started working as an employee. Now Income Tax Department's contention was that he did not leave India for the purpose of employment because when he left India he did not have an employment in hand and therefore the 60-day rule should apply to him. Now there was exhaustive discussion, there's reference to an earlier High Court ruling, there's a Kerala High Court ruling in the case of Abdul Razak. A lot of deliberation happened and the end conclusion is that the phrase for the purpose of employment not just includes a person who goes out of India for employment, but also applies to a person who goes outside India in search of employment. Right? But the controversy, ongoing, raging debate between tax professionals is, does this position change? Or is this an intentional omission from the phrase, the omission of the words, the purpose of, in the new bill? Is it intentional to overrule these set of judgments, or is it just a simple, non-harmful, non-thought of simplification exercise? As an SSC, I would want to argue, because see, look at the objective. Objective is only simplification. For employment, for the purpose of employment, makes no difference. I still continue to claim the benefit of the Kerala High Court or Mumbai ITAT judgments. But would department come back and say, no, the purpose word is deleted now, and now the ratio of the earlier judgments no longer is applicable to the new capacity? Any comments?
It will be the latter, because on a plain reading it says for employment outside India, which means you should go out of India for employment.
So, sir is of the view that for the purpose of employment and for employment are two different phrases with two different meanings.
Yes.
And the judicial precedents that we have on the phrase for the purpose of employment will no longer apply to for employment.
Yeah, because those precedents have interpreted the words the purpose of. And purpose can be I am going with the purpose of employment, which is to find an employment, be employed, and so on. Whereas the words for employment is very specific. It says I have to go for employment outside India.
Okay. I don't know. Coach will tell in time to come. Any other views to this? It's a very valid and strong view, but I'm sure there can be an equally strong and valid counter view to this. In my mind, I haven't been able to conclude on it because for employment is specific, for the purpose of employment is also equally specific. Again, I respect your views.
And people use that to evade and go from that perspective. I go in search of it, but not the intent will be there, but to get that aware that enough. So that's why I think in Abdul Razak case, it was for self-employment.
But again, the phrase for the purpose of employment was an extensive scrutiny. There, the court went on to conclude for the purpose of employment will also include for the purpose of self-employment. So he did not go and work under a person over there. He went and started his own business, started his own mode of living over there. And there, Kerala High Court was liberal enough to say even those cases will be excluded from the 60-day rule.
There might be this may overrule that judgment, maybe so.
So it will overrule that judgment.
Maybe because it.
Maybe is all that I can say. Okay, moving on. I dare not touch section 9. I jump on to section 10. Section 9 में two more complications. And it will get too hyper-technical and legal and probably will not be able to move any further. So we avoid that for our present session. The section 10 exemptions have now become section 11 in the new income tax bill. Section 10 of the present act is a pain. If you have to hunt for a particular exemption, there is no logical flow or order in which the exemptions are placed. It's a treasure hunt. That's something they have very neatly tried to address. So section 11 of the new act will lead you to schedules. Right? There are a bunch of schedules where you will find neatly categorized, neatly arranged set of exemption provisions. So there is one schedule 2 which will give you incomes not to be included in total income, incomes like agricultural income, key man insurance, EPF, etc. or exemptions that you will find under schedule 2. Schedule 3, income not to be included in total income of eligible persons. Share of profit, certain allowances, etc. Now the difference between schedule 2 and schedule 3 is schedule 2 is available to all SSCs subject to some income conditions. Whereas schedule 3, in addition to income conditions, is also got person specific conditions, SSC level conditions. So there is one added column. So it's all in columnar form, which again presently under the bill that I have to read, I find it a little difficult. I start at one row, end up at some other row. And I'm sure when the bill is finally out and the publication houses start printing the bills, they'll come up with borders. The bill that is presently available is borderless. The tables are borderless, which makes it a little not so easy to read feel, but then with borders I'm sure that will also get addressed. Then there is Schedule 4, exclusively meant for non-residents and foreign companies. Schedule 5, investment funds, business trusts, unit holders, REITs, InvITs, AIFs, all of those. Schedule 6, exclusively for International Financial Services Center. And then lastly there is Schedule 7, persons exempt from tax. Your entities like LIC, mutual fund, gratuity fund, CM fund, all of those are placed over under Schedule 7. So it's a nice attempt to declutter the existing Section 10 exemptions that we have, something that we have to appreciate and acknowledge.
It's not the Schedule 2. What is Schedule 1?
Good question, sir. We'll have to pull out the act and read it.
This conditions for certain activities not to constitute business connection in India.
Section 9, we skipped that, sir. Out of syllabus, we should not ask that.
They have not put borders purposely because they don't want us to confine to a particular. Then we start saying that it is in the border. No, it is free flow. It can go anywhere. If tomorrow you can argue whichever way you want.
Nicely put, sir.
And what is section 10 in the current act? Any reason 10 has become 11 something like that?
A new section has been added.
There is a lot of reorganization that has happened.
There is no.
But there's certainly something.
Something.
There's certainly something over there. I don't know, sir. We have to look at it.
Fine.
We go on to salaries. Salaries is now chapter 4b. It is again synchronized itself. Section 15. The section numbers has again synchronized itself. Again, something that we have to appreciate. It is, although there are no major policy changes or there are no policy changes with regards to taxation of salaries, but then the sections are nicely arranged. There is a nice logical flow to the reading of these provisions. So it starts with section 15, which is the charging provision. Pretty much says what the existing act tells us. 16 defines what is salary. 17 defines what is perquisite. 18 defines what is profit in lieu of salary. And then 19 gives you deductions from salary. So 19 is where. Yes, sir.
Sorry, I just have an answer to sir's question. So what they've done is, let's say earlier there was a section 5.
And 5A.
5 and 5A, that 5A has become 10 now. So 10 has become 11.
Oh, okay.
So I think all this ABCD they have done away with.
ABCD have been done away with.
And they made it free flow.
Thank you.
So back to section 19. Section 19 talks of deduction from salary. Now here is where you will find a visible change in the way we read the present act. So what they have done here is, they have again collated all deductions into a tabular format. Again, we have a beautiful table over here. So deductions from salaries will now include profession tax, standard deduction, death cum retirement gratuity, payment of retiring gratuity or to defense personnel, other. So these are all exemptions in the earlier item. I dare not get into the controversy of exemption versus deduction. We've had enough of you to cover. Export incentives moved from chapter 6 to 10 AA, and all the decade-long litigation happened, which ultimately concluded before Supreme Court in Yokogawa. Let's not get into that controversy now, though we've agreed not to get hyper-technical. But then, for reasons best known to them, exemptions, or rather some of them have now become deductions. Right? But do we have all salary-related exemptions and deductions in section 19?
No.
Unfortunately, the answer is no.
Some are in the table. Schedule 2.
It is scattered. You will find some of them in section 19 and some of them in the schedules. Accumulated balance of PPM is schedule 3, or rather schedule 2. Leave travel concession, any guesses? KBC. Section 19, schedule 2, schedule 3, none of the above. Leave travel concession is now schedule 3. Leave encashment is section 19. Leave onde kada agbodu HRA schedule 3. Entertainment allowance removed. Go away. I can go on, but then I think you've got the import of what I'm trying to say. I think it was a good opportunity to consolidate all of it at one place, either section 19 or maybe they could have had one exclusive schedule for salary related exemptions and deductions. But then they have ended up, so what was a treasurement of section 10 is now a treasurement between section 19, schedule 2 and schedule 3. I think there is still scope for improvement over here. By the time the final bill is out, probably if they are hearing this, they may incorporate that.
Is HRE still there in the new book?
That's it. Schedule 3. So if you're searching for it under the chapter income from salaries, you'll not find it. That's the sad part. Ideally, it should have been, ideally either all of these should have been in section 19 or all of these should have been in a schedule with a reference under section 19 or anywhere they wanted. So entertainment allowance is one policy change. So likewise there are a couple more policy changes in regards to taxation of salaries. So no deduction for entertainment allowance for government employees. So I'm told a couple of years back that the component of entertainment allowance from the salary structure of central government employees was done away with. So as of date, there is not a single soul claiming entertainment allowance deduction. So it made no difference. It made no meaning in retaining it in the new bill and rightly being done away with. Provisions pertaining to fringe benefits.
Make sure that entertainment is not hard for government.
We welcome this move, sir. Provisions pertaining to fringe benefits have been omitted. Fringe benefits is an animal I have never understood. It came in when I started my articleship. Before I could complete my articleship, it went away. So I never had an occasion to apply it or read it. Happy that it has been omitted over here also. Anyways, the redundant provision very rightly removed. COVID-19 related relaxations have also been removed. It's been 5 years since COVID-19 and there's no point in keeping that in the new. Moving on to income from house property. Now this is a FAQ which has been put out on the income tax portal. Interestingly, sir, in this FAQ, there is no owner. I mean, who's drafted this FAQ? Is it coming from CBDT? Is it coming from Finance Ministry? Is it coming from Law Ministry? We don't know. But it is there on the income tax portal. So we can quote. Why have more changes not been carried out in the chapter salary and house property? We are concerned with house property, so I'll jump to para number 2. For the part on income from house property, it was noted that the provisions are already fair, simple and are being well received by the general public. The concepts like annual value of house property, self-occupied property, etc. have been well accepted and there is minimal dispute in interpreting the provisions and computation of this head of income. There is a purpose why I have read this out and highlighted annual value of property. So the claim on the FAQ is there is no policy change. But then as we see in the next slide, there is a language change which is probably indicating at a policy change. We don't know, we have to scratch our heads. Section 21, determination of annual value. This corresponds to present day section 23, annual value of house property. Right? We do this arithmetic, actual rent, standard rent, all of that. Right? So that portion of it is retained, but again, we have to appreciate that the language is not more simplified, at least with regards to subsection 1. Any volunteer who can read subsection 1? Here's the mic. Sir, here, please. Sir, you can. And then we can keep passing it on. So she is already cursing you. Why you sat next to me?
For the purposes of section 20, the annual value of any property shall be deemed to be the higher of the following. A. The sum for which it might reasonably be expected to let from year to year. Or B. The actual rent received or receivable by the owner if the property or any part of it is let.
I'll pause it over here, sir. Till here we have, at least I have not had any confusions or complications, and we have to respect and appreciate the simplification in the language over here.
Here, year to year means which year? Tax year, financial year.
That's the beauty of any change that you bring in, and that's the beauty of a chartered accountant mind, the legal mind, which and the professional mind which questions anything and everything. And I'll come to it, sir. Before that, subsection 2, madam.
In case the property or any part of it is let in the normal course and was vetted for the whole or any part of the tax year, the annual value of such property shall be computed as per subsection 1b.
So this 21 subsection 2 corresponds to 23(1)(c) of the present Income Tax Act, right? Which provides for, in simple words, vacancy allowance. So what 23 to begin with tells us, annual value of the house property is going to be chargeable to tax, but then 23(1)(c) gives us a vacancy allowance to say if for commercial reasons the property could not be let out, it was lying vacant for part of the year, for that portion of the year you don't have to pay any tax. There is no income that is going to be taxed in your hands. Same thing is said over here, but with 3-word addition in normal course. So there is a new condition which is being inserted to the allowability of vacancy allowance deduction to say the letting out should be in the normal course. So please help me understand what this means. Now I went through some legal dictionaries to understand what does normal course mean. The legal dictionaries will tell us normal course means a set of activities or events which are recurring in nature and which are executed in a usually expected fashion. So the key here that troubles me in the context of our present reading is it should be recurring in nature. How do you interpret this, sir? On one hand, in the FAQs they are saying there is no tax policy change, but then there is a visible language change. And end of the day, when it comes up to litigation, what is going to win? That FAQ, ownerless FAQ, or the act which is the statute which is being cast on us? Obviously the statute, right? So we necessarily have to give some meaning to this word in the normal course and try to comprehend how it is going to practically impact us in our daily tax computation.
So let's say you have a vacant land. Okay.
I have a vacant?
Land, just an example. No, I know you're talking about
house property. Okay.
Just trying to do easy examples so that everybody can pick it up. Okay, say normal land is there. Okay. In a normal course, when you let out the land for a 1 month or etc., 2 months and years for years together, the value can be X, right? You have a X value. But there can be you let out your land for putting some shop, some normal temporary shops, etc. They pay exorbitant rent for the days.
Okay.
So if somebody pays 10,000 per day, doesn't mean that 3 lakhs is the actual rent for the month. If I give it as a normal rent, nobody will take for 3 lakhs. People will take for only maybe 1 lakh. So that is the case. When I let out a property, let's say I have a property next to the any auditorium, etc., where there is a huge footfall will be there on a very specific base. I can let it out for a month at an exorbitant rate versus in a normal scenario where the auditorium is not there, it's not filled up, it's a lesser rent. So not 1 day, 2 day of your rent can be deemed as your normal rent for the whole year and then deemed as a more rental income.
I think that was not the intention, because
That's it as per me.
you are trying to relate normal cost to the pricing.
That's it. Normal course is not the pricing. Normal course, if I rent it out in a normal scenario, what is the income that I am going to get? Versus I rent it out only in a specific period on a demand. Okay? I just give it.
I think the normal cost has to do with the very activity of letting rather than the price at which it is let.
Okay, let's look at it. Take the Mahakumbh itself, right? When the 45 days Mahakumbh
In the interest
itself
of
is
time,
there,
in the interest of
the
time.
let out is not a normal when you let out for the entire year.
Okay.
Right? So that is the difference between your
Again,
normal versus any specific.
Again, I think the pricing is certainly not the beauty of, again, see, the beauty of the discussion is
It demand? It's a demand and supply of that particular moment versus in a natural course of a year.
okay.
Excuse me, 1 minute.
Yes, please.
I suggest that we have a long way to go instead of getting into disputes like this. I have it's a suggestion. We will not be able to cover it because it's a big act. You have.
Again, that's something I leave it to the audience over here. There are two ways of looking at it. The destination is important or the journey is important. We can quickly rush through all the slides that I have and reach the thank you slide quickly and give full utilization or full credit of the time and effort that I have put into build those slides, or I am happy to take a more constructive deliberation of each of the provisions. So this is something that we are all reading it for the first time. Now, sir had one perspective to it. There are going to be more perspectives to it. We'll also be mindful of the time that you have on hand, and I'll take your word as well.
Why I just mentioned is, for any word, any change, you can have multiple options, multiple explanations can be there. That's what I'm saying. The main thing is today to cover the things so that we have a total clarity, total customized view. What are all the changes, what they have specific in mind, instead of going after legal technical.
We'll try to have a balance between the amount of deep dive they are going to do and the time that we are going to consume. We'll try to cover as much as possible. At the same time, we'll also be open to different views that we have here.
So the beauty lies in the journey, not in the destination.
Okay, so one example, probably not a very appropriate example that came to my mind to explain or to address this issue of normal courses. Let's say I have a third house property. This vacancy allowance has no meaning for first and second house property, which I can claim it to be self-occupied. Let's say I have a third house property at Ooty, which I never let it out. But during the peak tourism season, when an agent comes to me with an exorbitant offer, I will leave it. So this is a letting which is not in the normal course. Normally I don't let it out, but abnormally, at an abnormal situation, I do a letting out. So in those cases, possibly what they are trying to say here is, I will not get a vacancy allowance. Because for the rest of the year, this was not let out, this is not a letting in the normal course. This is a letting in an abnormal situation. Maybe not the right example, but then in the interest of time, I just leave this with you for you to ponder over, and then we'll connect some other day again to have more insights on this. I'll move on to PGPP. PGPP में one very visible change. Again, the entire layout has been redrawn. It starts with I think section 26 and ends at section 57. 26 and 27 are your charging provisions, and then from 28 to 57 you have your machinery provisions. No deduction has been taken away from you. No new deduction has been added, at least to my limited reading of that. So if there's something more, please feel free to contribute. There are some ICDS and those adjustments here and there which would again lead us to a hypothetical discussion, which I have tried to keep it outside. Presumptive provision is something which I thought is very practically relevant for our daily practices, which is why I pulled this one up for our today's discussion. So, all presumptive provisions relating to a resident, that is your 44AD, 44ADA and 44AE, have been pooled into one section 58. Again a table, nice little table is there. Business 6%, 8%, profession, a table that we'll see in the subsequent slides. All non-resident related presumptive provisions are now part of section 16. It is worth reading giving a bare reading of section 58. The mic can continue to be passed on. With the title, we start with the title.
Section 58, Special Provision for Computing Profits and Gains of Business Profession on Presumptive Basis in case of certain residents. Section 58, Subsection 1, the provisions of Section 26 to Section 54, to the extent of contrary to this section, shall not apply to the specified business or profession mentioned in column B of the table in subsection 2.
I think we'll come to subsection 2 in a while. So, this is the opening provision of the presumptive section. Very similar to what we have under 44AD of the current law. 44AD would begin with notwithstanding anything contrary contained in section 28 to 43C. So, basically they are overriding all other PGBP provisions. A similar effect given under 58 subsection 1 without using the word notwithstanding. For some reason, the present lawmakers are allergic to the word notwithstanding. You will not find notwithstanding even for once in the entire income tax bill. There is no notwithstanding word in the new income tax bill. But then they have tried to, or rather they have achieved in securing the overriding position without using notwithstanding. Even without notwithstanding, this is a non-option clause. Subsection 2, sir?
Subsection 2. The profits and gains of any specified business or profession as mentioned in column B of the table below, carried on by an assessee specified in column C of the said table, having total turnover or gross receipts of business or profession during the tax year specified in column D and computed in the manner specified in column E thereof, shall be deemed to be the profits and gains of such business or profession chargeable to tax under the head profits and gains of business or profession.
And then there is a table. And then on a lighter note, I think the team of draftsmen had one guy from the earlier act. Very lengthy, no? This could have been further simplified, but nevertheless. And then there is this table. The table will give you eligible SSE, specified SSE, business 1 crore, 3 crore, 6%, 8%, 50 lakh, 75 lakh, 50%. The same tonnage rate for presumptive taxation for transport operators. Absolutely no policy change over here. Then of course I think subsection 2 there is a scope for further simplification in the way the sentence itself is worded. Subsection 3, sir.
Any SSE mentioned in column C of the table in subsection 2 who claims that the profits or gains actually earned from the specified business or profession are lower than the profits or gains computed in the manner mentioned in column D of the said table, and whose total income exceeds the maximum amount which is not chargeable to tax, shall be required to keep and maintain such books of account and other documents as required under section 62, and get the accounts audited and furnish a report of such as required under section 62.
Beautiful simplification of what is otherwise very complicated in the present act. So it tells you pretty much the same what is told to us in the present act. If your income is lower than what your presumptive income is, if your actual income is lower than the presumptive income, then you will have to maintain books of accounts and you will also have to get your books of accounts audited. Simplification achieved without any complication, without any policy change. Or no? Any conflict or any confusion that arises to your mind out of this? This is a beautiful attempt of simplifying it. Beautifully simplified. But then any complication that you see arising out of this, or any change in tax position that you see arising out of this?
Exceeds the maximum amount.
Exceeds the maximum amount not chargeable to tax is a phrase that we've been using even under the existing act. Okay. That's not new. Any policy change that you see here? There is one. Not intentional, but an unintended policy change. If I'm a professional, let's say my gross receipts are 50 lakh. What am I expected to offer to tax? 25 lakh. 50%, 25 lakh. But then I claim my actual income is only 10 lakh. Under the existing 44 ADA, I have to get myself audited. I have to maintain books of accounts. But does this same hold good for 44 AD of the present act? Under 44 AD of the present act, when does the audit requirement kick in?
More than one.
The audit requirement kicks in only if I have opted into 44 AD and now opting out of 44 AD. So let's say if it's the first year of my business, my turnover is 1 crore and I am wanting to offer to tax only 1 lakh as my income from business. Do I have to get myself audited? Answer is no. Under the existing act, it is yes under the new act. Right? Particularly why I pull this up is to impress upon you that the most beautiful of simplifications will have its own complications. When a word is said, when a sentence is said in a set of words, no matter how much effort you put in simplifying it, when you use a different set of words, there are going to be implications, there are going to be deviations. This is one classic example of such deviation. When you are an assessee with 20 lakh turnover, you are expected to offer 1,60,000. You claim only 50,000 as your business income and you have other incomes taking your income above the basic exemption limit. Even for 20 lakh turnover, you have to get your books audited. Intentional? Certainly not. But is it the clear import of the literal meaning of the provision? Definitely yes. Doesn't stop here. Subsection 4. Allegedly, sir. Like, but it's obviously important.
Any loss, allowance or reduction allowable in the section under provisions of this act shall not be allowed against the income computed in the manner specified in subsection 1.
First things first. There is no manner of computation given in subsection 1. Manner of computation is given in subsection 2. But then let me bring out 44 AD subsection 2 of the current act to which this subsection 4 corresponds. Madam, can you read 44 AD subsection 2?
Any deduction allowable under the provisions of section 30 to 38 shall, for the purposes of subsection 1, be deemed to have been already given full effect to, and no further deduction under those sections shall be allowed.
Sir, what changes do you note? Of course, the number of words are reduced. It's much simpler to read. But any policy change, any implications? Sir, 44 AD subsection 2 provided only for deductions under 30 to 38, that is income from business. Subsection 4 does not restrict itself to income from business. It applies to the entire act. So let's say you are still assessee under the old scheme, you will not be able to claim section 80C equivalent in the new bill. Because it says any deduction, all deductions, and it doesn't restrict itself to deductions, it also goes on to hit your losses and allowances also. So let's say you have loss under the head house property and you have presumptive income, you cannot do a set off. Intentional? Maybe, maybe not. This is the certain consequence of the law as it is given to us present. I'll pause for your reactions and inputs and probably some time to digest this also. No, such is the difficulty of, you read any section, sir, you find some minor deviations or major implications like this. So what we are doing today is not an exhaustive read, a comprehensive read of the entire act. Bits and pieces from here and there. Just to impress on you or just to showcase how it is going to simplify our daily practice.
No, I think this is intentional.
Intentional is, then it's very harsh.
It's a,
On one hand, you're saying that, but then it makes no sense also, sir, at a policy level. Income from business being set off against house property, what problem would they have? I can understand deductions within the same head of income not being allowed, inter-head, or rather intra-head set off not being allowed, but why prohibit inter-head? I firmly believe it is unintentional.
this kind of changes there in many places.
As I said, we are not doing a comprehensive review of all the changes. This bits and pieces, trailer hai, picture baki.
The thing is, they have used the word act. Provisions under this act is no deduction at all.
I don't know what thought process, or probably what the ministry should do is, ministry should put down a paper or what went behind the scenes, what thought process went into the whatever changes and drafting that they have brought in. So that will probably serve as a guide in interpreting and also in litigating.
They don't want you to take more benefit.
Is that the intent? See, at one hand they are saying we are not making any policy change, we are only simplifying that. But then this is a huge policy change.
Yeah. Giving you what
So you are of the opinion that this is intentional?
when they are giving you 4480, they are giving you a benefit to disclose the whatever nominal rate. And then
But then why restrict me from house property law set off? Why restrict me from house property law set off? Why restrict me from ATC deduction? I am not convinced that this is
You
intentional.
will not be able to, when you rise to court, when I say house property, somebody will say this property, somebody will say business class. So instead of that, put a general class.
Maybe ATC is the new regime, nobody anyway will not take.
Okay, but then
But it is harsh when you look at business and that is very harsh.
And I am touching the bread and butter sections of our profession. 44AD, next 44AB. I am not bored with the read of 44AB. 44AB we very well understand. 1 crore, 10 crore limit, 1 crore to 10 crore relaxation only as cash receipt, cash payment are less than 5% of aggregate receipt, aggregate payment. And then we have profession 50 lakh and all. I am not bored with the read of 44AB. But then if sir can help me with reading of section 63(1), which is the corresponding provision of the new rate.
Section 63, subsection 1. Every person carrying on the business or profession fulfilling the conditions specified in the amount B of the table below shall get his accounts of the tax year audited by an accountant before the specified date. Table, serial number 1, conditions for getting books of accounts audited.
You can continue to read, sir. The table is where we have some.
A, B. Serial number 1, where the total sales, turnover or gross receipts from business or profession during the tax year of any person who clause A, C is carrying on business and at least 95% of aggregate of all the receipts and payments from the business during the tax year or through specified banking or online mode is more than rupees 10 lakh. 10 crore.
I'll call you further. But this is another change that they have done throughout that. So the existing act will read 100,000 or in some cases 1 crore. So all those numbers and words are replaced by numbers and figures. Right? With an intention of simplifying it. But then those who have to get confused will still get confused. But I think it's still a welcome move. Okay, so I think we can stop here, sir. We'll pause here. Any noticeable change?
5%
Okay, the existing act was 5%, the cash receipts and payments should not exceed 5%. It is now negatively worded to 95%. Yeah. Good note, sir.
I have another question.
Yes, sir.
This income from house property, there is 50% reduction.
Income from house property, sir. Can you please mic pass one more?
30% reduction in share of the house property.
That is retained, sir. 30% reduction on house property is still there in the new items.
Provisions relating to present 4480.
Oh, that will also go away.
30%, because they have specifically said the total act. When you talk about act,
No, but it will not be allowed against business income. If you read, a loss, allowance or deduction shall not be allowed against income computed under present authority. There we are safe. Thank God, sir, you are not there in the finance ministry. Okay, back to this. So, very rightly noted, the existing act says your cash receipts and cash payments should not exceed 5% of aggregate receipts and aggregate payments, and this is now being negatively worded to say your cash receipts and cash payments should not exceed 95% of your aggregate receipts and aggregate. Is it the same? It is not the same. It is not the same. It is not the same. 95% of aggregate of all receipts and payments is not the same as 95% of aggregate of all receipts and 95% of aggregate of all payments. I hope this distinction is understood or rather conveyed properly. Let's take an illustration. My cash receipts is 3 out of 100. My cash payments is 6 out of 100. Under the existing act, do I get that 10 crore benefit? No, because my cash receipt should be less than 5%. My cash payment should also be less than 5%. But now here what they say, my banking payments and banking receipts should be 95% of aggregate of all receipts and payments. So I will not do an individual test, I have to do a total test, and the total test is met. So on one hand, poor presumptive fellow, you are being so harsh. And here, on a assessee with 10 crore turnover, you are being liberal. This is certainly not intentional. This is not intentional. This is a slip-up. Right?
So here they are giving 10% leeway versus 5%.
So you are being harsh on small assessees. Presumptive 1 crore turnover wala, you are being so harsh. 10 crore wala, you are giving some leeway.
Because for that 10 crores guy, you need it, right? You need to play around.
The drama does not stop here. Because it says 95% of aggregate of all receipts and payments from the business. The business word is missing in the existing act. How much of hair splitting we do? Existing act tells you 5% of aggregate of all receipts, 5% of aggregate of all payments. The words business, this qualifier is there only in the new bill. What implication is that? One scenario that I could come up with. So let's say you're a partnership firm and you've taken capital from your partners. So your bank account credits comprise of 1 crore capital contributed by partner and 1 crore of receipts from your traders, from your sundry debtors. Your bank statement credit total is 2 crores, 1 crore from partners, 1 crore from sundry debtors. So under the existing act, we do the 5% test on 1 crore or 2 crore? 2 crore. Because the act says all receipts, there is no qualifier, there is no condition over there. And gracefully, the income tax return has also gone on to make this very clear that capital contributions and capital account withdrawals will also form part of the aggregate receipts and aggregate payment. But now what? Now under the new bill, you take 2 crore as a base or 1 crore as a base? 1 crore. There are two ways of looking at it. The broader interpretation of the term business. It is the business of the firm to receive funds from partners and commercially exploit it. That is part of business receipt. So I'll take 2 crore. Or a narrower way of looking at business. Business of the firm is trading in goods or rendering services. Capital contributions are not business receipts. Which one is correct? Let's say tomorrow we have to apply this. What do we apply?
From the business, so capital receipts will not come.
The capital contribution is not part of the business.
Not part of it.
So you are subscribing to the narrower view of the word business.
What about the other way, sir? 2 crores investment and 2 crores withdrawal also. Same thing. So we have to offset.
The beginning of the session I told, questions should not come to me. We have identified 2 people. The gentleman at the last row in white and one more here. This is as new it is to you and me. we probably have to wait for some guidance note from the institute or some circular from CBDT or some court judgment. Right? I have more questions than answers today, sir, unfortunately. Section 62, 44A equivalent of our Income Tax Act. So there we have a definition of specified professions who have to maintain books of accounts. We have two insertions over here, information technology and company secretary. This was even otherwise there as part of notified professions. Notified professions was a long list. Out of that long list, I don't know why they chose only two to bring them out of the list into the act. But the list will also come because it says or any other profession as notified by the board. So board notification is still going to come. Right? I read a few articles, newspaper articles from reputed publications stating that film artist is no longer a profession under the new bill. I think it's very premature to conclude on that. You cannot draw such conclusion until and unless the board comes up with a notification. In the provision it is not there. If it is not notified even in the act, or rather if it is not notified even in the board notification, only then you can conclude that yes, film artists are outside the purview of notified professions. PGV के आदमी ने आई फोर्स को कैपिटल गेन मिलो इतो it is gone to pay advance tax. Income from other sources. Most interesting change over here. 56 to 10 we have this gifts from relatives, and then we have this definition of relatives. Relative means in case of an individual spouse, brother, sister of the spouse, brother, sister of either of the parents, any lineal ascendant or descendant, maternal as well as paternal, any lineal ascendant, maternal as well as paternal, or descendant, maternal as well as paternal of the spouse. The change as is highlighted here is the clarification that the ascendant or rather the descendant can be paternal or maternal. Under the existing act, these bracketed words are not there, and there is some dispute. Although I have not come across any judicial pronouncements on this, but I have come across some articles with strong views to say ascendancy and descendancy, or the lineage is always paternal, not maternal. You can take gifts from your dadu, not from your nanu. Is what? Not my. Madam is very upset with me. It is not my subscription of the interpretation, but then there is some explanation given to it. There is some Latin and judicial interpretations going along with it to say maternal lineage is not part of relative. Again, something that I don't subscribe to. Now, then a good thing to say maternal as well as paternal. What troubles me is the placement of this bracket. Point number F you see, lineal ascendant, bracket maternal paternal, descendant, bracket maternal paternal. But point number E, maternal paternal is only to descendant. Ascendant ki kutila. So what am I to make out of this? The down also or is there, no? Point number E or is there, point number F also or is there. In law there is this rule of interpretation which is called rule of last antecedent. It says any qualifier towards the end of the sentence, unless the context otherwise requires, should always be deemed to attach only to the last antecedent. Meaning, suggesting that maternal or paternal is only attached to descendant, and ascendant maternal paternal qualifier is not there. And this interpretation gets further enforced by the fact that in the immediately next point, their ascendant has this maternal paternal option.
Because in E,
so from your spouse's nanu you can take a gift, but from your own nanu you cannot take a gift. You can take a gift from your daughter's children, but you cannot take a gift from your mother's parents. One possible interpretation. I am not concluding here. Then this is the first blush reading of how the law is given to us. sounds absurd. I'm sure smart minds will figure out a way to give a much more broader interpretation meaning to it, but then it's so needless. Certainly avoidable.
Because the spouse is there.
The power of the spouse comes in here. Point number 8. So the spouse cannot take a gift from the nanu, but the SSC can take gift from the spouse's nanu. TDS provisions. My biggest browse in the entire income tax scheme. Smartly or not so smartly, what they have done is all provisions other than salary, all TDS provisions, they have clubbed it into one section and few tables. Section 393. So all 194C, 194A, H, G, I, 195, everything you will find it now under one single section, 393, categorized into 4 tables, which are not numbered also. That's another problem, you know. The issue that we used to have with provisos 1023C, there is no numbering. We have more than a dozen provisos, but they are nowhere numbered. Same problem here also. We have a bundle of tables across, but there is no numbering given. So we'll have to do it. So table number 1 is payments to residents. 194A, C, Q, everything is sitting in this table. Payment to non-residents is table number 2. Payments to any person is table number 3. For no deduction at source. So what is table number 3? Table number 3 is those set of TDS provisions which is applicable to resident as well as non-resident. Online gaming, horse race. Even in the present act, those provisions apply both to resident as well as non-resident. So that's table number 3 now. And then there is a 4th table for no deduction at source. We'll look at it. So this is to me a classic case of desimplification. To impress on you on this, let's take a simple example of 194C. Okay. 194C, what is the rate, sir? 1%, 2%. Same rate retained. Where will you find it? You will find it in section 393, subsection 1, table for residents, serial number 6, point number 1. Imagine you have to give instructions to your staff or give a clarity to the client. Presently, he comes to your with a transaction, hey, 194C, 1%, end of story. 393, subsection 1, table number 1, serial number 6, point number 1. This is how it is going to be even when you fill the challans. Filling challans is already today such a imposition kind of a feeling. Right? It feels like your teacher has punished you. Anyways, exemption for transport contractors. If you have less than 10 goods carriages and give a declaration, all of that is still there. There is no change in the rates or application or the practical flow of the TDS provisions. It's just the placing of those provisions. So 194C subsection 6 will now be found at 393 subsection 1, table number 4, table for no deduction, serial number 8. Definition of works. Presently, explanation to 194C. Right? There is now 402 clause 47. And then we had this clarification, no? That if the invoice gives you a segregation, a breakdown of the goods and services, on the goods component you will not do TDS, which is given to us under 194C subsection 3, is now a note below serial number 6. So what was earlier in one section is now scattered across multiple tables and provisions. And these notes are something that I'm very not so happy with. I wanted to use stronger words, irritated, but then not so happy with suffice. Problem with notes is notes are also not numbered, and then you have notes below the serial numbers and you have notes below the tables also. So you have one set of notes. So below serial number 6, point number 1, there is a note, and below the table also you have a set of notes. absolute mess of otherwise what was a good reading of the TDS provisions. I'm sure again 20 years down the line in the second round of simplification they'll say, hey, let's declutter, let's dismantle all these tables and let's put all provisions pertaining to a particular transaction in one section. If you have to understand the implication or applicability of provisions of one particular transaction, what is easier, sir? Me reading one section or me having a scattered read across tables and across provisions?
I feel the table is actually better. I have a different view.
So table is better only to the extent of identifying the rates.
No,
So ready reckoner data है sir.
We have to refer to a table now.
You have to refer multiple tables and multiple provisions. It's all scattered across. For this example, you see, I had to go through how many provisions? How many tables?
But it's all in one page. Earlier act you looked so
It's not in one page, sir. That's what I'm trying to say. It's not in one page.
It is on one page. If you're looking at that particular thing, there
No, section 6, the item number 6 and the note is in one page. But then 194C6 is in serial number 8 of a different table. It's at table number 4. The definition of works contract is in a different section altogether. It's at 402. Whereas definitions of some of the other provisions are in the notes. So some are in notes, some are in a different definition section. There's a lot of scope for improvement is all that I can say.
They wanted it to be on the table, it has now gone below the table.
See, rate simplification is already done by publishers, by the institute. Institute का study material उठाओ, table से nicely, right? But getting that into the act was, I think, not a wise move. Not a wise move.
They're making institute easier.
So lawmakers have now become a publication house. They are giving you ready reckoner with that. Important policy change under 197(1) of the present Act. You can under Form 13 apply for a lower deduction certificate or you can apply for a no deduction certificate. The new Act now provides only for a low deduction certificate and not a no deduction certificate. A clear policy shift. Or can there be a different interpretation? And apply for 0%, which is still low, no? 194C gives me 2%. I'm applying for 0. Lower than 2 mathematically.
Existing it says lower rates or no deduction. So they made it as lower deduction. So 0 also will come.
No, 0 is not a reduction. 0.01 is a
That's the beauty of a study circle means. That's why we are all assembled here and we are trying to have mass impact over zero.
Whereas nil will be 0.
Yeah, 0.01.
And then I'm very sure the department will come back and say, hey, no deduction. See, no deduction was there in the earlier act. Do you have no deduction here? No.
You can go even 0.0001.
So people will go with 0.01. That's it.
Not complaining, I'm just saying that it's a conscious policy shift. That's an impact. Anyway, 0% किसको मिलता था? That was a myth in the current act also, no? They would always give you 0.1 or if you're very lucky and you have very good relation, 0.01. 0% at least I have not seen in my practice, limited practice. Anybody here with 0%?
So they're becoming practical here.
Is it? I like positivity in you, sir. But that's the way to approach. You can crib and it doesn't spoil your mind and you can enjoy it. It's not something that is being legislated for me alone from the entire. We all enjoy it.
As long as the section is there, we all still have work. At least to get this. No, they not remove the section.
Yeah.
Super positive.
In fact, if you go back to the previous one, you can tell anybody 190 PC, easy to pick it up. Now I need to tell 10 lines. So even the client will understand earlier so much is complication is there.
Fees will increase.
At least he will pay.
Yes, sir.
At least he will pay, if not increase.
At least recoveries will happen. See the amount of fun that we are having here is one side of it. But the amount of pains that we'll have to undergo in times to come. In this new act, all the rules will have to be rewritten. All the rules. All the forms will have to be redrawn. all the computer softwares will have to be rewired. You computer software forms something, Infosys yaad aa gaya. Imagine what will happen to India. The form itself, at least the initial version software will have inconsistencies, it will have errors. I'm not talking about the e-form. The PDF form will have some gaps, it will have some inconsistencies. And I dare not discuss the errors and the issues that are going to come at the service provider level. I don't know if it's going to be Infosys or somebody else, but whosoever it is going to be, it's going to be a challenging task. 194B. So we'll get back to reading from the code. Yes, sir. Can you please?
194B. Winnings from lottery or crossword puzzle, etc. Provided that in a case where the winnings are wholly in kind or partly in cash and partly in kind, but the part in cash is not sufficient to meet the liability of reduction of tax in respect of whole of the winnings, the person responsible for paying shall, before releasing the winnings, ensure that tax has been paid in respect of the winnings.
Just it is telling you if the winnings is in kind or if it is partly in cash and partly in kind and the cash component is not sufficient to take care of the TDS, as a releaser of the winnings, I have to first ensure that the TDS is secured and only then release the winnings. Otherwise, I am liable for certain defaults and certain consequences. So what is the equivalent provision of this under the new Act? We don't have an equivalent provision under the new bill. So what is the impact of that? As a deductor, I can now get away. Of course, they fix it by the time the final bill is presented. But as it stands today, in case they forget to fix it, as a deductor, I can get away by not deducting tax at source without any consequences, without any defaults. Alternate minimum tax. How many of us have applied alternate minimum tax in our practice? It's not minimum alternate tax. I'm not referring to MAT. I'm referring to AMT. How many of us have applied it? Hardly few, right? It's very similar to MAT. MAT is applicable to companies. AMT is applicable to non-companies. The reason we have not, most of us have not applied it in our daily practices, it applies to a very small set of SSCs. Those SSCs who have claimed a deduction under Chapter 6A subheading C, 80 HHC to 80 QQBRRB or 10 AA or Section 35 AD and their adjusted taxable income, that is excluding these deductions, is more than 20 lakhs. Right? So the way we have the concept of book profit, no? So MAT is 15% of book profit, AMT is 18.5% of adjusted total income. And then the same concept of MAT credit, AMT credit, carry forward for 15 years, utilize it in subsequent years, all of that is very similar to what we've seen in that. Now what has happened in the new income tax bill? All MAT provisions and all AMT provisions have been put into one section, 206. Very difficult. Again, classic case of de-simplification by use of, see, tables are good, but it is not good across everywhere. So you look at the table meant for book profit computation, horrible, very difficult, very difficult. Okay, anyways, that's not a point for discussion. So AMT and MAT are now section 206 of the new Act or the new bill. And these exclusions which have struck off are missing in the new bill, at least as it stands today. Meaning, AMT is applicable to all non-corporates. What implication will it have? I'll give you an example. Let's take an example of a LLP whose only income for the year is 1 crore capital gain. What is your normal tax liability, sir, including surcharge and cess? 12 lakh 50,000. But now, you would also have to do AMT computation. So adjusted total income is also going to be 1 crore. And your AMT liability is going to be 18.5. Policy change or accidental unintended CPAP? Policy change. If it's a policy change, it's a very high consequence policy change. Thankfully, AMT as it stands today is not applicable to SSCs who opted for new regime. and that they have retained here. So even in the new bill, if you opted for new regime, you don't have to worry about AAP provisions.
See that, but LLP there's no new regime, old regime. There's only one regime.
Which is why I took up the case of example के लिए. थोड़ा होमवर्क मैंने भी किया है सर. I'll pause for some reactions and comments.
This is actually a dangerous section.
Intentional?
I think so.
We're all in the realm of speculation. Okay.
How does it matter? We will have to just follow it.
Can I make a stand to say, गलती से भूल गए? See, look at the finance minister's speech. She said no tax policy change. This is just an accidental slip up. बड़े-बड़े act पे छोटी-छोटी गलती होती है.
Her definition of tax policy is different.
And I think what will also happen is the forms will automatically pick up all this.
Forms, trust me sir, are going to be a nightmare. When we migrated from version 1 to version 2 of the income tax portal, remember 21-22, due date went beyond the COVID year due date. COVID year due date was January 15th. This year due date was February 15th. If by 31st March, in the first year of this implementation, we are able to complete our filings, I'll be very happy. Because you'll have changes within the form and then technology catching up with those forms. Get ready for a fun ride.
Sir, we are facing all these things every 3-4 years old.
So we are used to it. This is now normal course.
Yes.
It is recurring in nature and it is usually expected out of the department. It's normal routine for us now.
All acts are over. This new one.
This is the new one. Which brings me to this discussion. I know people are going to have very strong views and I'm going to respect both the views. Whether this exercise was needed, could the simplification, see there's no simplification of the law. It is not that they have done away with assessment and they have changed the procedure, the way the tax filings work and all of it. It's not change in the law, it's only change in the language of the law. Needed, could they have achieved it by amending portions of the existing act and by not bringing in a new act? Is a question that I want to throw to the audience here.
No, I think law should be reviewed once, 50-60 years. With that objective there.
See, it should be reviewed but with the objective much bigger than mere change in language. See, we had a change in Companies Law. Companies Act 1956 turned to 2013. There was a huge shift in the way law operated. We moved from an act-based law to a rule-based law, making the act more flexible and more nimble. We moved from VAT, service tax and all those indirect taxes into a GST with a larger objective of consolidating all those indirect taxes. But here only simplification of language, new act, personally I am not convinced. The amount of, see, we have discussed how many sections today?
Hardly about 10 sections.
Not even 10, we are in single digits. We have 593 sections to deal with. We will have to go through each of those provisions to analyze and conclude. The amount of professional time that we are going to spend on this, nobody is going to remunerate us for this.
It's a refresher.
The amount of technological changes that we'll have to bring in. Simple procedure, simple, tedious payment, tedious return. It's going to be a huge impact. It's going to be a huge burden on the SSE as well as the taxpayer as well as the tax professional. Doesn't matter, this has come. It is not like your direct tax code of 2010. This will certainly come. Things are moving at a very fast pace. There are widespread consultations that they are doing. They have appointed EY as their advisor. They have met ICI to take their feedback, their suggestions. And there's a lot of background work activity happening. come this monsoon session, you will definitely see a new income tax bill. There's no escaping this.
It's more simplified.
So as sir says, rather than fight it, accept it, acknowledge it positively and enjoy it.
It's more simplified from tax point of view, collection of tax.
From tax collector's perspective, there is more tax and therefore there is simplification. Easier to meet the targets.
Yes.
So that's simplification. Simplified words or new litigation for you to decide. Throughout the act you will see notwithstanding has been deleted. You will not find notwithstanding throughout the new bill. It is replaced with, in places, with the word irrespective. In some places they have found other ways to, what we saw 4280 example, they have found other ways of overriding the other provisions without using the word notwithstanding. As may be prescribed has become as prescribed. But this notwithstanding and irrespective of is a huge ongoing debate. I'm sure you have all been touched upon by this in your WhatsApp groups, in your email alerts, in your professional discussions with your friends. The dictionary meaning of irrespective of is not taking something into account. In fact, I heard one of the legal experts saying irrespective is a very disrespectful way of putting things. Irrespective of what you say, I have no respect for you. I don't care. So, he was a strong believer or strong favor of this notwithstanding, as if common man is going to understand irrespective of. He did not understand notwithstanding, he did not understand irrespective of clause also. Non-option clause is non-option clause. And then notwithstanding, the dictionary meaning is without consideration for. There are a bunch of legal experts who advocate that there is a change in the way the law is going to read with the change in this language. Notwithstanding, we had a lot of judicial prudence. We know how to interpret notwithstanding. Irrespective of, is going to be a fresh battle from the scratch. 1. 2. Notwithstanding would override only those provisions where there is a conflict. Irrespective of would override even those provisions where there is no conflict. This is what school of thought. I am no expert to conclude on that, I just leave you with this. As may be prescribed and as prescribed with jala tension. There's good amount of tension over here. As may be prescribed refers to a scenario where the rule maker is empowered to prescribe it even in the future.
As prescribed is already prescribed.
As prescribed means it is already there. And the word may makes it discretionary. The rule maker may or may not prescribe. The section would still be workable. But then when the law uses the word as prescribed, the rules have to be present, otherwise the section won't be workable. I'll give you one small practical impact of this. Remember 48.3 of the new act? Still applying, we all know the new act. The existing act, sorry. 48.3 of the existing act was amended by Finance Act 2019 with effect from 1st April 2019 to say payment shall have to be made through banking channels or any other electronic modes as may be prescribed. Okay? They have used the word as may be prescribed. And the prescription under Rule 6 ABB came on 29th of Jan 2020. And the words maybe have saved the government over there. Assume the words maybe was not there and instead the phrase as prescribed was used under 48.3 that we have today. I would have taken a contention that from 1st of April 2019 up until 29 Jan 2020 when the rules actually got prescribed, the section is unworkable and there cannot be a dissonance. And I have strong judicial supporting to this. मजा आएगा ना नए एक्ट में अब्बा सर नमಗೆಲ್ಲ
without sweets or it be diabetic.
In accordance with is replaced with as per. I don't know what impact is it going to have. Hereinafter is replaced with herein. This is definitely a change in the meaning. No? Hereinafter means in this act from this point onwards. Herein means in this act, not just the subsequent provisions but also the preceding provisions. How is it going to practically impact is something that I have not been able to work out, but I'm sure we have a lot of smart minds in our profession who will use this distinction to make out a case for the tax assessor. Return of income and assessment provisions. To be honest, I, in the time available to me, haven't been able to go through all of these. There is some changes with regards to repetitive appeals and all of it, which I haven't gone through in detail. But I then found a very interesting new concept of recomputation. Now, the present Act defines assessment to include reassessment, but the new bill defines assessment to include reassessment and recomputation. I did not somehow find the machinery provisions on how this recomputation is going to work. Possibly I haven't done my homework well enough, I haven't read through all the provisions. But then I found some missing links. Probably it is actually missing or I have just missed it, but then the import of what they are trying to tell you over here is, let's take an example of reassessment for assessment year 21-22. Your income for assessment year 21-22 has been reassessed, and there is some addition or some adjustment with regards to your depreciation computation or with regards to the losses that you are eligible to carry forward. So what they are trying to say here is, within 1 year from the end of the year in which that reassessment order is passed, for all subsequent years where there is a opening WDV or depreciation impact, or where there is a carry forward loss impact, all those years income will be recomputed. Right? That's the big change. This, in the interest of time, taxation of trust. I have no trust in myself to read this. Trusts are now not-for-profit organizations, a welcome move. And they have nicely been categorized, I should admit that. Existing section 11, 12, 13 is absolutely no particular flow. The flow of sections has no logic to it. So they are very logically and nicely categorized into 4-5 chapters: registration, income, commercial activities, compliances and violations. I will not go any further into this. This in itself requires a dedicated, probably 2-hour session to deliberate further. Some fun facts. Along with the bill, we got a corrigenda. Corrigenda meaning these are identified mistakes. The bill has to be read along with the corrections. Basically corrections. But what surprises me is they found out exactly 50 corrections. Probably the team was given a target. 50 corrections identify money bidala. Correct 50 they identified and went home. You know, fun fact. The corrigenda itself requires a corrigenda. Sir, dekho sir. Read the date, sir.
February 11th.
February 11th, आगे? Year? 2024. There should be a separate corrigenda. The date should be read as.
This bill was only introduced on February 13th, right?
I'll come to that, sir, but then look at the year.
The year is okay, I'm saying even the day is wrong.
Sir, last time when a year mistake happened, you know the amount of fuss that it got created on the social media? ICI, Gazette, Financial, so much of ho-halla happened, nobody making any noise here.
Bill is draft. It's only a bill. Draft.
So what, sir? It's come from the parliament. And the bigger fun fact, as sir pointed out, the bill was placed on 13th Feb. This corrigenda is dated 11th Feb. So if you knew it before, you could have as well corrected the bill, no? 50 targeted to identify what money go withdraw. And then they came back, oh, bill is released, let's release this also. So
maybe they thought it will be placed on 11th February, it got posted.
The point is they knew it before the bill got placed, no? So that they could have corrected the bill itself rather than coming up with the corrigenda.
Changing the bill would have taken more time.
Sir, MS Word, sir. Line number, page number, words to be replaced, all identified.
Maybe they have already printed those copies.
ನಮ್ಮ ಆಫೀಸ್ ಸ್ಟಾರ್ಟಿಂಗ್ ಕೊಟ್ಟರೆ ಅರ್ಧ ಗಂಟೆ ಮಾಡ್ಕೊಟ್ಬಿಡ್ತಾ ಇದ್ರು. They would have printed.
Because each
So they were environmental concerned. They didn't want to waste
Yes,
printed pages. We give them the benefit of doubt. Pure intent. Correct. So, do we have only 50 mistakes? No, sir. We have too many mistakes. I'll give you just a couple before we conclude. I know we are running out of time. Section 74 talks of special provisions for computing capital gains in case of depreciable assets. At the end, you will see it says shall be subjected to the provisions of subsection 2, subsection 3 and subsection 4. There is no subsection 4. In that section, it starts with 1 and ends at 3. There is no subsection 4. This is very good. We will spend a minute here to read it. Who's holding the mic?
It should be standing to value.
Full value of consideration for transfer of assets other than the capital assets in certain cases.
So this is corresponding to 43CA of the current Act.
In case of transfer of an asset other than the capital asset, being land or building or both, if the consideration received or accrued from such transfer is less than the stamp duty, then such stamp duty value for computing profits and gains from transfer of such asset shall be deemed to be the full value of the consideration.
So 43C of the current Act tells us if there is transfer of any immovable property comprising of land, building or both, and the transaction value is lower than the value adopted for the purpose of stamp duty, then for the purpose of computing gain, computing income, we will substitute the transaction value with the stamp duty value. They wanted to compress words, no. They said is less than the stamp duty. Value word is missing, sir. I made a transaction for 100. Stamp duty value is 200. Stamp duty is only 10. Section not applicable to me. What's this, sir? That team has come back. That collision team has come back. It's working again. Imagine if they miss this, even in the bill. What happened? Golden rule of interpretation, literal interpretation. It says less than stamp duty, the transaction value is not less than stamp duty, section not applicable. Okay. 40A1A of the current Act is now 35B1 of the new bill. Can anybody please read this? Next in line, the mic.
35B section 1. 30% of any sum payable to resident on which tax is deductible at source under chapter 19B, and during the tax year such tax has not been deducted or after deduction has not been paid up to the due date of specified in section 263 subsection 1.
Till here it is same as what we have under the present Act. But then it doesn't stop here. We have a comma followed by a where, a hyphen, and then point number A. So please read point number A also.
Tax is deducted and paid during any subsequent tax year. Deduction of such sum shall be allowed as deduction in computing the income in any subsequent tax year in which such tax has been paid.
English language to me does not make any sense. It says 30% disallowance where tax has not been deducted or deducted but not been remitted. It doesn't stop here. It goes on to say where tax is deducted and paid in any subsequent year. I don't know how do you. One way of constructing this is disallowance will attract only in a case where there is non-deduction in the current year and deduction and remittance in the subsequent year. If there is no deduction and remittance in the subsequent year, also no disallowance. Definitely not what they intended, but one way of constructing this is what I just read. I'm pausing for some other views and a better interpretation of what I just gave.
Are we saying in any subsequent tax year?
Yeah, so the main section says disallowance is attracted where there is no deduction or after deduction there is no remittance. Does it stop there? Where I have to continue and say where tax is deducted and paid in subsequent year. So that becomes an added condition in one possible way of reading it. Again, if I still continue to read, even this will not make sense. But I am just pausing at that second comma. Moral of the story, sir. Moral of the story.
So even if you
Life is good. Practice has huge scope in years to come. Huge scope translates to huge fees or no, I don't know. Question mark. That's a question mark. And with this question mark, I think I'll conclude my session. Thank you all for a very patient and very interactive session. Thank you, Branch.
Because we have an announcement, we have a 9 seminar on 29. Kindly register yourselves and ask your friends and those who are linked to. It's a 1-day program. Thank you. Yeah. Thank you, Deepak sir.
Thank you, sir.
Yeah. And it's demystifying. Hope so. The mystery still surrounds us.
I certainly hope so.
Yeah.
See, the idea behind this was actually not to demystify, but open our eyes to see how much of mysteries are there for us to unravel. This is just a eye-opener, a trailer of what is going to come before us.
Thank you. Thank you. May I call upon Chairman please to hand over the gratitude of appreciation to the Speaker. Thank you, members.